My name is Andrew Keene. If my name sounds familiar, it might be because you've seen me on TV. I'm on all the time. I'm the millennial turned multimillionaire who's been showing everyday Americans an easy extra income hack.
All right, testing. A Monday, Wednesday, Friday, Saturday. Let's see if I got sound here. Yeah, I think so. Hey, good morning, everybody. It's Wednesday. You're still alive, so you might as well make some money. Hopefully these webinars every single day at the Forex.Today YouTube channel give you the strength you need to get out of bed and do what needs to get done. That could be scalping, it could be spot trading, it could be swing trading, it could be position trading, it could be carry trading. There's lots that needs to get done. So good morning. Let's go. So, welcome YouTube, welcome Twitch, welcome Facebook. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, everybody. It's nice to see you. My name is Wayne McDonald. I'm a currency trader. That's it. That's my avatar. And let the success I have found and will continue to find in the world of Forex be a guiding light to my fellow ex-male models. So even if you were an ex-male model or were a male model and you've decided to retire and find something new with your life, you can become a currency trader, just like me. But anyways, so cool. Yeah, Forex is great, man. So if you like Forex, this is the channel. We were kind of talking about it yesterday. Do I do the raw, go, trade, 20 pips here, 20 pips there type? Is that what this webinar is about? About getting rich quick? No. But it is about building a sustainable business that provides value, at first to yourself, but one day to clientele. Think about that. A sustainable business. It's about creating a sustainable business, and the only way you can have a sustainable business is value creation. So yes, you can scalp, but not in a get-rich-quick fashion. More like, how can we do fundamental and technical analysis of the market and then apply some behavioral finance techniques to it to try to accurately predict the future for today, tomorrow, next week, next month, next year. And then be able to execute on those trade plans. Very cool, right? So if that is enticing, if that's intriguing, if you find that attractive, then you are in the right place. You're going to need an execution partner, aka a broker that has access to liquidity partners. And you need a firm that you trust. And one, when you click the button, they actually execute the trades, not just on your chart, but actually put them into the interbanking system. You want a broker that doesn't B-book you and trade against you and all that. Right? But also low fees and high income. And you'll find that at tradersway.com, and that's why I've partnered with them. They've partnered with us because they want their clients to be successful, and they believe proper, solid, focused, down-to-earth, grounded education is the way to that success. So it's a symbiotic relationship. So they are asking you for an opportunity to earn your loyalty and respect. So please visit tradersway.com, open up a demo account. The form is in the bottom right-hand corner. You fill it out, takes just a few seconds. Boom, you're in your back office. Everything looks clean and organized, very cool. You can download MT4, MT5. You can have an ECN account, fixed spread account, variable spread account. I go with the VAR because that's what the Wayne do. Thank you, Traders Way. My name is Wayne McDonald. I am a currency trader, and I am excited about today. It's a Fed day, and today is the last day of the year. You're like, wait, what? Yeah, today's the last day of the year. Now, I will continue to do webinars, of course, because I always got to keep one eye on the market, right? What's the Belle Biv DeVoe song? Keeping one eye open, still clocking the hose. Anyways, I'm like, wow, is that high school? I think so. Right? So anyways, I always got my eye on the market. Very cool. So we'll continue to do webinars. But this is getting out week. This is moving out week, right? Remember? There's twice a year you can park your car in Harvard Yard. Belle Biv DeVoe. Now you know. Yo, slick blow. So anyways, so this is time moving out. It's time to shut down your trades. Or if you want to try to hold them and do tax deferral strategies, that's where you exit next week. Either way, it's up to you. So right now, dollar's still weak. That's good. Yen got strong overnight. So I think my last yen pair is Kiwi yen, and I think I'm on the precipice of exiting that for 333. Okay, cool. So what else is going on? So I'm long euro. Man, this is all messed up, right? Okay, I'm long euro dollar. Euro could be stronger, huh? But it ain't. Pound is recovering, but remember how oversold it was. Now it's overbought. And that vol is what made me exit, both the pound yen and pound dollar, but also year end. But this could, you're right. This is all Brexit. But you remember Brexit it's news, but it's not fundamentals. It'll be fundamentals when it's done. But this idea of super strong, super weak, super strong, super weak, that's high volatility. And it's not really what I'm interested in. Now, of course, you could be trading it, but I like the slow and steady dollar weakness, for example, and that's what I base my trading on. It's nice to see Swiss franc weak. It's a little strange, too, because that's what I want, but it hasn't been doing what I want all year. Kiwi, moderately weak with the moderately strong yen. That's what's pulling that down. So yen is slightly stronger than Kiwi. And that's bringing my Kiwi yen down. And like I said, I'm on the precipice. I don't know if I still have it. Yeah, I still have it. 332 pips, but you can see it's red lighting here, getting ready to get out. So, right? So good job. 333 on that one. And what were the other ones? It's the euros, the last standing, right? 500 pips on each euro trade. Very cool. So that's it. And then that should be the end of the year. That's I think the 6 trades yielded 2,500 pips. It's not bad for 6 trades. But the issue is I'm trying to teach you, first of all, how to trade a political election. The second thing I'm trying to teach you is swing trading. Third one is year-end flows. And then fourth, the potential for taking profit based on time and not price. So hopefully one of those lessons was a good lesson. Okay. Did anybody learn anything? One of the things we do in the live group is every once in a while I'll ask for people to think about what they did learn. What did you learn? Because if you don't remember, then it didn't happen, right? And one time I had people stop and think for a while and say, what advice would you give to a brand new trader that you've now known, something that you've learned, right? Johnny says the brain is a sponge. I think it's more like a brick. It can absorb, and it will absorb, but it takes time. Okay. So anyways, let's just look at the last 2 champions. Okay. Our target, let's do on the Confluence template. Okay. Do you guys remember our target? Can I count this as that we have successful? Like this is what we planned for the month of December, wasn't it? 122.22. The actual high right now is 122.11. All right. So the question is, do you hang on and go higher or whatnot? Now, isn't it interesting that we have actually, I don't know if you want to count that as truly target hitting. Let's see, 122.12. And I said 120. So we're within 10 pips of what we talked about weeks ago. But we hit it on the exact day we said would be the end of the year. How about that? Yeah, but Richard, that's old news. That's old news. But, right, so China PMI is pretty good. China export data is pretty good. And that's sort of newer information. So it's not China per se that matters to the US dollar. It would be other countries that are buying stuff from China that matters. Okay. Does that make sense? Like if you say, oh, well, restaurants in China are going to have more business because their cities are reopening and Chinese locals can walk down the street and eat in a restaurant. But like, who cares? It doesn't affect the dollar. It's good for the no, good for the Chinese economy, but it doesn't really matter otherwise. Okay, you have to look at the import-export data. Okay. So nobody think that's amazing, huh? That we're hitting our target on the Fed day, the declared end of the year day, of which profit taking should begin if it hasn't already happened. And now we're hitting it on that day. Not amazing? I like it because it will give me confidence to do what I need to do next year. Right? Thank you, Amanda. Do you understand? Like, I'm always searching for confidence. I'm always searching for confidence. Okay? So, if I have an opportunity to give myself the courage to do what needs to get done in the future, so I'm saying this stuff works, right? Like, here's the obvious buy, and here's the exit. And we also know the time base is the Dees Fed meeting. Okay? Remember, we talked the last 6 weeks about a time-based exit. Right? And that is the Fed day. Right there. So the time-based exit around the December Fed meeting. And boom. Now the time-based, okay, the time-based says for the month of December, you should consider exiting between 22.45 and 21.64. Then threading the needle further, the trade of the week, okay, and I'm going to leave it backed out here, okay, but the trade of the week is, here's your buying price. You can see you got the central, and here's the exit, okay. Now, I think sort of the best trade is this one. OOP, exit. Do you remember that? I said, I know you want to exit, or I said, I know I told you want to exit in December, but you don't like the fact that it's happened in the first 4 days of the month. And you feel like getting out on December 4th would be wasting the rest of December. Am I right? So now 12 days have gone by, and now it's 10 pips higher. You had to wait 12 days to make an extra 10 pips. Okay? Now, sure, you can say, well, wait, you'd exit there, and then you get back in here, and you're just like, you're the golden child of trading, and you're like, yeah, I don't care about the double top, man. We're going all the way. Like, that's exuberance, I would think, right? But isn't it cool that this is a basic like kindergarten level analysis, and then this is straight up OOP, counter trade exit, right? That could have been done. You could be done. I think I said you should be on the beach in the Caribbean now. It should be you with the beautiful person in the Caribbean while your interns sit in the office and prepare for year-end rotation, right? New Trader says, doesn't mean a big drop after FOMC. Okay, do you guys want to talk about FOMC? Okay. Cool. Okay. I've prepared you for at least 1 year. Okay? So you tell me, what is the Fed going to do, and what does the market expect? Okay? Do you have an answer for that? I know you don't have to type it out. If you don't, I hope you are confident enough and transparent enough with yourself by typing in a question mark if you don't know. Well, Gary, you should just be in our group. So in the professional group, Gary, there will be a time when everybody sees your live trades in the group only. And so about 5 years ago, 6 or 7 years ago, I funded about 10 people, I think, maybe a little more, and had them trading on a trading desk. And we tracked their trades not just on the trading desk, but in our group. And I had a 30-day rolling average leaderboard. So you can see where you're standing over the course of 30 days, not just a month, just rolling 30 days, how you're stacking up to your teammates. And imagine we had something like that, Gary. Okay. Okay, you're trading other people's money, and everybody can see you're trading in real time. In fact, when you pull the trigger, boom, everybody's notified. Gary just went long euro dollar. What? Doop. Okay. All right, so lots of people are typing in question marks. Thanks. Remember, guessing, okay? Guessing is no good. So, the market wants to know the difference between where we are and what's going to happen in the future, of course. Okay. So what I'm saying, Gary, is you don't have to go through all that process. In fact, it would be distracting to the group, right? Yes, of course, Richard. If you don't know how to trade, we don't want you in our group. So, for example, we have two groups. We have my group, which I call the live trading group, sometimes the swing trading group, because that's the old name. And then we have another group that's on a professional track to learning how to be a portfolio manager, trading other people's money. Okay, that's a professional track. To get in the professional track, there is an examination, if you will, a tryout. And on the last day, the final exam is you have to make more than 10,000 pips in a month. If you can't do it, you're not even remotely qualified. You're still on amateur mode, okay? So forget that, right? So you have to stay in my group where I can fix you. You see that? So Richard, yeah. And by the way, 10,000 pips under very, very specific, very conservative, very stringent trading circumstances. It's not like you just open up a chart, fire off 35, 40, 50, 60, 70, 80 random trades and knocking down some pips. And by the way, if you fail out, you're fired. We keep your $200 application fee and you're kicked out. So you have to do it right while people are watching, essentially, right? So yeah, so if you can't even fathom making 10,000 pips in a month, then forget it. You're not qualified, right? So that goes to Richard, right? So the way you do is you start at fxbootcamp.com, you go through the training courses, you join my group. I'm pretty sure I'm going to do Newbie Tuesday, maybe Fundamental Wednesday, Wednesday Fun Days. Yeah, Wednesday Fundies, and then maybe and then we'll do our other, our normal Thursday meeting. So maybe in January we'll do three a week, right? Yeah, Ali, it's true. If you only do 2,500 pips under that test, you're not even close to qualifying. Yeah. It's just simply, you're still on amateur mode. You just don't get it. So you have to prove that. With the Blue Book Club Monday, yeah. Yeah, I'll have to think about that. Book Club Monday might actually be good, Jim, because then you have the weekend to do your work. See, the key with the book club under the process that I'm designing is we need 10 to 15 to 20 people that will do their work very well, and do it on time every time. Because the problem with group projects is if one person doesn't do the job, the whole group suffers. So imagine now, we're doing a live call and I'll say, okay, well, Jim read, chapter 17, 18, and 19. So Jim, give us an overview. And you're like, well, I was busy this weekend. I didn't read it. And then we're all standing there like, well, what the F, Jim? Like, how do we move on? You're like, well, I was busy, dude. Get off my back. I'm like, Jim, we're all standing here. Like, what do we do now? Well, move on to chapter 21. Gee, Murphy, right? So, right? Well, Alton, don't read 3 books already because you're not following it properly. My group, here's my vision. Okay, here's my vision for the book club. We are going to read the top 100 investing books of all time. Okay? And we're right, top 100. And we're going to do it in less than 2 years. Maybe even 1 year. Might take 2 years. I'm not sure. Depends on how fast and how good the group is. So imagine every week you knock out a 700-page book. And it might be cool enough if we were aggressive enough. There are some months where we could bust out, let's say, 10 books in a month. It might be a 5-week month, and we do 2 books a week. And they could be 4, 5, 6, 7, 800-page books. You're like, Wayne, that's insane. There's no way I can do it. Well, Harvard will teach you how to do it. So I know how we could do that as a group, and we're going to use the Harvard methodology. So I will teach you. And now imagine you had that under your belt, that anybody can mention any book and you've read it. And not just read it, because that just means you read it. Doesn't mean you understand it. Doesn't mean you remember it. Most people don't remember what they read. So you're going to know it. And that's the difference between being smart, educated, and intellectual. You will know it. Right? So, So you're going to get a Harvard education on investing, right? Awful retail sales? Really? Maybe there's a pandemic. Yeah, but thank you, Adam. All right. So anyway, we'll fix all that. So let's go back to this. And FOMC. Okay? The market is going to want to know inflation versus interest rates. Okay? Okay? Inflation versus interest rates. I was wondering if I got that backward. Is it I versus little I? Big I versus little I? These are conversations we used to have in class all the time. And sometimes I mix them up. One's inflation, one's interest rates. Okay. So right now, in real terms, you take your you take your interest rate minus inflation, for example, and right now we have negative yields. Negative real yields. Okay. What does this mean? Well, first of all, the government's going to be able to pay their debts back with cheap money. Okay. Okay. Ponzi scheme, Alton says, no, well, that's pretty tough language. Let's not use language like that. But I know what you're saying, and it's somewhat true. I mean, it's not a scam, but it's smart in the sense that you borrowed $1 billion, right? And those dollars you borrowed were more valuable than the dollars you pay back. But anyways, okay. So there's inflation versus interest rates, but inflation moves up is more volatile than interest rates because they follow, right? So the Fed wants, or the market wants the Fed to tell us, exactly when they're going to move interest rates versus inflation. And they've kind of told us a little bit. They said, well, right, if you watch yesterday's video where I show you the productivity gap and then the overshoot. And so the Fed says, yeah, okay, well, we'll let it overshoot and then we'll raise. Well, raise at what price? Like, at what level of inflation? How far will you overshoot? And then there's other things like the duration or where on the yield curve. So, for example, 1 year, 2 year, 3 year, 10 year, 20 year, 30 year. Okay. And 1, 2, 3, 4, 5. Okay. So you have a yield curve that looks like, okay. And normal. So if you want to look at actual versus potential, which we've done in sort of other videos, it's supposed to look like this. Okay. So, the Fed's the market wants to know, because you got to remember the market's doing a lot of different things. There's a lot of different strategies, and many of the strategies are related to interest rate levels. And like which interest rate? There's many different interest rates, right? So when you do yield curve analysis, the market's going to want to know, okay, if inflation goes to 1.5%, for example, what will the Fed do? The Fed's not going to answer that. And then they'll say, well, what if it's 1.6? Then would you raise? And then if you raised, right, or let's say when it hits 1.4, you don't touch the Fed funds rate, but you have this bond buying program. Are you going to buy the 1 year, the 5 year, the 10 year, the 20, the 30? Because we know when the Fed buys, right, they're pushing down yields to get that negative interest rate, because it's a negative real interest rate, not a negative, nominal interest rate. And then at what levels will influence the Fed to buy more or less bonds, right? Like the ECB has been much more transparent, and they're telling you exactly how many bonds and at what part of the yield curve, but the Fed's not really doing that. So the market's going to say, well, under what situation, like if we're at 1.4, are you going to change your policy? And if so, what's the policy change? Are you going to continue buying bonds? Are you going to shift where you are in the curve on the bonds? Are you buying 3 months or 3 years or 30 years, right? And as we get higher inflation, do you shift this? Do you reduce? Do you add? Do you stop? And then do you at some point raise interest rates? And how far does it have to shoot before you start raising interest rates? Because there's players all along here that many of the players want this and other players want that. Let's mark that down with a different color. Some players want this yield curve to rise. Others want it to fall. Where you want, maybe rise in the short run, fall in the long run, right? And then get closer to, this normal yield curve, right? And then, so these people or trading the spread between the two, they need to know what the Fed's going to do if they're going to continue making money. Also, this will impact how banks make money. See, banks want this to go up and they want this to go down because they're paying deposits and they're giving you the prime rate or whatever. They're giving you essentially like the Fed funds rate. What they want to do is pay you 0.25%, let's say. and then they want to lend it to you on a mortgage for 5% or 4%, right? So you're like, well, Wayne, you can get a mortgage now for 3%, right? A jumbo mortgage is 3%. But maybe in a year or two, it'll be 5% again. And that spread between short cash, long loans will impact how much profit Bank of America will make or JP Morgan will make. Okay? And that'll impact whether you should be buying bank stocks or not. Or the value proposition of a credit card company, or whether people use shadow banks or not, or whatever. It affects all kinds of investing. Obviously, if interest rates on mortgages go from 3% to 5%, that makes the real estate industry more expensive and the financing of it more expensive, so that might slow things down. Or out of a behavioral finance situation, if everyone thinks we're going from 3% to 4% to 5%, then you better buy your real estate now. So it could create on the short run in the next couple of years, a huge boom in real estate. And then 3 years after that, the real estate market could be saturated and done because it's now too expensive to finance new projects, you see? And this all comes down to inflation and interest rates. And more specifically, when and where on the yield curve. When will they shift their current policy? Why will they shift their current policy? And how will they play out the yield curve? Because it'll affect stocks, real estate, bonds, and currencies. And you know what the Fed's going to tell us today? Huh? First of all, let me ask you something. Was this a helpful discussion as far as understanding the importance of where we are in the economic cycle? Just this so far. Has this been helpful? Ali says no. Okay. Okay. So let me answer it this way. You ready? So these are all the questions. And the Fed's going to come out and say, accommodative, for as long as it takes, as long as is needed, will not raise interest rates to overshoot. Remember, this has to do with closing the productivity gap and getting above potential GDP. Okay? And they don't expect this at least 2023, but probably quite a bit after. Does this answer those questions? When? What level? What price? Where on the yield curve? It doesn't answer those questions. It's vague. Okay? Fed's not going to do stimulus. That would be the government, not the central bank. So, most likely, there's a chance here, guys. I don't know the future, but there's a chance on the exact day that I don't know, educated you about weeks and months and maybe even years ago, is the top of the market. And that this target here is the top of the market. But that's why I recommend, or have recommended, that you see this coming and you do something about it. So in that case, the dollar would go up, Joseph. Because we won't know. So I would imagine the stock market's disappointed, at least for today. Okay? And therefore, USD up. Okay? Now, on top of that, what does this area here tell you to do? Let's just focus on that. What does this area tell you to do? What do you already know based on technical analysis? If you didn't know this was euro dollar, if this was Hungarian francs versus, was it Czech crowns? Was it CZK? Okay. And you saw this, what would it tell you? Exit. Cool. Now, that's the December exit. You split the hog down the middle. Great. This is the weekly. What does this tell you? By the way, it's not sell. Joseph says sell. It does not mean sell. Okay. Okay. So, yes, that too says exit. So, you have to ask yourself, like, what more are you expecting here? And at what point is it gambling or guessing or simply not having the strength to do what is required? Overlapping exit. Another word for that is confluence. Okay? So, like, what exactly are you planning on here? Okay? The only thing you're going to get here that will help you would be stimulus package on the fiscal side, not the monetary side. That's not going to happen today. You're going to hear a lot about it today. And they're going to meet probably at midnight, and they're going to have some sort of verbal agreement. Sort of a letter of interest versus a letter of intent, right? And then it has to be written. So they would have to write the law, and then they would have to pass it on Friday. So I think they're going to meet midnight tonight and get sort of an LOI, more of a letter of understanding, right? Certainly not an intent, but of interest and understanding, right? And then tomorrow they would have to write it up, and then throughout tomorrow you're going to find out, wait, they might not do it. They might not come to agreement. This whole thing might fall apart, because this is how newspapers sell newspapers. And then finally, it might get done on Friday. And it might even, I don't know if they can push it off till Saturday. Because basically, Friday, the government shuts down. Literally, if they don't pass some sort of bill, not stimulus bill, but they have to refinance the government, and that has to get done by Friday. Now, of course, they could push this through the weekend, and this could go into next week. And they say, we understand it's holidays, but we're going to work this out. So they might even push it next week, defer their holidays, makes them look good as politicians that they're hammering this out, getting the best deal they can, right? But what does all of this mean? that I don't think anything's going to happen today, but you'll get a lot of news. It'll be hopeful. And then tomorrow you're not going to get anything but the writing. And then there's going to be delays and defers, and they might not even do it by Friday. They might just not do it. So there's a lot of risk here for someone to want to purely stay along. Okay? Now, do you have to get out? No, you can do whatever you want. But I do want to point out the variables in your decision-making process. And you knew weeks ago, right, that there are 4 levels of price you got to be super concerned with. Okay? And you hit dead center. Okay? You want more. I want to make sure you know why. And then you should be able to explain why it's not degenerate gambling. Yeah, Bitcoin to 20K, saw that. Okay. Okay. So, I don't have the answer for you. I got you here alive and healthy. Now you got to put the boss pants on or skirt and make the decision. Abel says proceed with caution. Well, that's like let's say a young lieutenant is in the jungle with his platoon. And he says, ooh, my spider senses are tingling. I think we're walking into an ambush. And what you're saying is, we will proceed with caution. Maybe you make it through alive, everything's cool, or maybe everybody's dead in the next 30 seconds. Not really sure. How do you handle that situation? Okay? It's an ethical question, of course, and you should treat your money, your dollars, you should treat them like employees, like good employees. Because these employees work for you night and day. They work holidays, they work weekends, and they never, ever bitch and complain. But you got to take care of them. Otherwise, they're gone forever. So, proceed with caution. What would you do if your life depended on it? And the interesting thing is, your life does depend on it. Okay? Or if you're managing people's life savings, you're managing money that came out of their retirement account. They're relying on you. You're like, well, I could totally see we're going to get ambushed here, but I'm going to proceed with caution. What does that even mean? You see that you're about to get ambushed, but you're going to cautiously walk into it and get slaughtered. You're like, right? Like, I don't know. So you got to be careful is all I'm saying, okay, Abel? I know I'm picking on you a little bit, but I'm trying to make a point. And Christy doesn't even get it. Did you just walk in, Christy? Walked in, fired off some questions. Take a seat and hang around for a year or two. Okay? Yeah, cool. Take a seat, subscribe, hang out with us for a year or two. I mean, just the fact that you walk into a webinar and you're like, hey, is dollar going to fall? You just told me you don't know anything. So don't worry about it. Okay? But we can fix that. Okay? We can fix it. You should never, especially a YouTube idiot, listen to them for advice. Okay? Anyways, cool. So, that's the target. You have to make your decision now. This is a target planned out weeks in advance. Okay? I have over 1,000 pips on it. And we are on the exact day and split in the middle. Nailed it. So what do you do now? Okay? And that's for you to decide. That's a boss issue, so to speak. Okay? You plan things. You have the discipline to get in. Do you have the discipline to get out? Or what is your plan? And I would like you to be able to very clearly not say things like, well, I think it's going to go up farther. I want you to be able to explain to somebody exactly what it's going to do before it happens. So you're going to say, for example, let's say you expect this to go up higher because a stimulus package is going to be announced today, tomorrow, or Friday. Okay, great. Remember, it has to be signed into law on Friday. That's why I say tomorrow. It's got to be written tomorrow for them to sign it, right? Which means they have to come to some agreement today, and they're not going to do it until midnight. All guesses, of course. So let's say a stimulus package is announced. Where is this going to go? Okay? Where is this going to go? Plan it out. And you'll say, well, the high projection for the month is 2244. Is that really our target? And do you really need those extra 30 pips? I mean, really, you're going to hang on for 30 pips? Okay, great. What if we overshoot? Okay, the overshoot would be up here. Okay, that's the monthly R3. And we very rarely hit that, but it does happen. Okay, let's see the last time it happened. Last month? No. The month before? No. The month before that? No. The month before that? No. Okay, the month before that? Yes. So it happened in July. Okay? It also happened in March. It can happen. But you need some big news. Okay? Well, a stimulus package. Okay, great. So now you're saying, all right, you've analyzed the political landscape, and you're making a determination that we will get an announcement. We're going to kick off a role reversal, and we're going to rally this up to R3 this month. Okay, great. That's what you think. Great. If you get to R3, will you take profit? Because I have to understand why you're not taking profit now. By the way, Christy, are you still here? You made $127,000 trading Forex? Is that good, Justin? So Highlander, but that's what I'm saying. You need to answer that. I want to know why you would overwrite something so obviously a top. So you have to have an opinion, right? And your opinion would be there's one more rally. It's going to happen because the stimulus is going to be announced. All central banks, because remember we have central bank announcement today, but there's 2 or 3 more left in the week. They're all going to say liquidity is still going to be out there, free money, right? All that kind of stuff. Okay. So Justin, if I'm understanding correctly, you're South African. You've invested with somebody else, and this somebody else has made you, I guess, a lot of money? I don't know if $127,000 is a lot of money. Okay. And you didn't say in how much time frame, right? So in a month, in a year, in a decade? But so I don't know what you're asking us to do here. You can contact them, right? Contact who? Why? You don't trade your own money? Then why are you here? Yeah. This is funny. Yeah, good. Oh, great. Well, I'm glad you made a ton of money, I guess. That's right. And who's he? Okay. But thank you for telling YouTube this is quality content. If you could please also click the like button before you disappear forever, that'd be cool too. Make sure you post your spam in the comment section below the recording. Yeah, that's true. That's a good point, Marina, right? It's a pretty good point. Yeah. Yeah, I don't own a car, so you should send me some money so I can buy a car. I need one bad. But I have a pretty kick-ass golf cart, though. All right. So anyways, so going back to Mickey's question, I need you to have a very clear thesis of why you would main risk on in something that obviously, technically, by the way, technically, everything here says you're supposed to get out. Okay. Now the next thing is, if you believe fundamentally now this will go higher, you still have to have technical exits. So you should be able to. So this is the thought process here, right? Well, you can't buy a Lambo for $127K. But so anyways, so you have this, it's not bias, but you have this investment thesis, this idea, this analysis that you've done fundamentally that tells you there's a high probability of a stimulus package being announced in the next 72 hours. And that you don't want to get out now because you believe that's going to push the euro dollar up. Cool. As long as you're making a statement like that. Okay. 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 And then, if that is your trading idea, I want you to have a very clear exit, because you're throwing away a very clear exit now. So if this ain't what you're looking for, what is it that you're looking for? And you should have that defined. Right? Like I said yesterday, I believe every contract and every agreement has to have an expiration date because you can't just offer something forever. Okay? Okay? See what I mean? So that's how I'd handle that. Okay? R3, S3, all that kind of stuff. So just make sure you have that written down. You got it. Okay? Yeah, we're happy for your success, Justin. Congratulations. But we're not interested, so you want to move on to the Bitcoin group or the stock trading group down the road. There's a lot of get-rich-quick YouTube channels on Forex. They're probably interested. You're just in the wrong place, bro. That's all. No harm, no foul. Okay. So is anyone actually willing to write this down? What I just said? Okay. Joseph says, why wouldn't you exit now and wait till the market? But I'm asking you to make that decision. Okay. Okay. Yeah, John Kroc, this is definitely the Get Rich Slow channel. We're about creating value and building a sustainable business around currency trading, for sure. This is going to be the 40-year journey. Okay? Cool. Yeah. So, Theta, I answered that question, but let me do it again. How would the correlation affect Euro USD? Well, let's do it this way. So I said the Fed meeting will be disappointing, not in policy, but in the fact that there's no specifics. What the market wants, listen to this. The market wants to know how they're going to make money next year. This year's done. They've hit their bonuses. Great. What about next year? And whether you're trading the spreads on yield curves or whether you're trading the spread between bond yields and stock dividends, or you're a long short equity play, or you're a market neutral play, or you're a hedge fund player, or if you're in leveraged buyouts, if you're in merger arbitrage, if you're in foreign exchange, which could be a carry trade platform. It could be, swing trade platform. Everyone wants to know, hey, Fed, what exactly are you going to do next year? Because I need to know how to align myself so that I can make money. This is on the mind of everyone. How am I going to make money next year? And the Fed controls and influences all of this. Because if you're a leveraged buyout firm, you leverage like crazy. Leveraged buyout. What does that mean? Your borrowing costs matter if you can do the transaction or not. So, hey Fed, I'm a leveraged buyout firm. Are interest rates going to go up next year? Or if you're a spread trader or market neutral trader, or long short or long only? This is like your wealth manager, long only. Should you rotate out of growth stocks into value stocks? Should you rotate into banking? Why would you rotate into banking? Because maybe the Fed is going to play the long end of the yield curve, driving up yields on the 30-year, but keeping money practically free at the short end, which would make bank stocks or banks more profitable, which then would make bank stocks go up, and maybe you'll miss the whole rotation because you don't get any of this. But I think most professionals do. So what will happen is the Fed won't answer. They're not going to answer that. They're going to leave us with what we already know. So that's not bad news, but it's disappointing now. So let's say the stock market comes down later today. Stocks, right? Stock market falls, right? Stocks fall, US dollar will rise. If you thought that would be the case, I'm challenging you to think ahead always. If you thought that was the case, you should have bailed earlier. You hit your target, what more do you want? Okay? And if it comes down, can you buy it back up? Yes, you can buy it back up, especially if you think there's going to be a stimulus. Now, how do you normally play this? Well, you normally would play this, well, not on a Wednesday, but by tomorrow, for example, your buy zone is at 121.50. Okay? So typically, you would do this. Actually, let me redraw this. I'll do it with an, right? This would be typically what we do. Okay? And you got your role reversal, your kicker, and all that is here, right? You got all of that. Great. But see, that's next week's swing trade. Okay? Does that make sense? Okay? So, what if you're wrong? What's the consequence of that? Okay? Because if the Fed does what would be within the normal realm of possibility, we know the best you can hope for is 122.44. We knew this 2.5, 3 weeks ago. We already knew that. So if things happen as they might, and it's reasonably good news, you're still going to exit at 22.44, but for some reason you didn't want to exit at 22.11. Well, what does it matter statistically? Who cares, right? Now, here's the bigger thought too, okay? You want to stay in this longer, and I'm okay with that too. The most logical situation is that you're in this to, I can't quite see it. Let me zoom in. I can't see it now, right? I have to zoom out. Hang on. Hang with me. Bounce with me. You're targeting 124. Okay. Oh, look. I already have it planned for you. Okay. See? So the question is, you believe this is going to blow through December targets and then hit January targets. That's actually a pretty good situation because that creates a big downward move. If it happens in the first, let's say, 10 days of January, wow, that's going to be great. So, if you're thinking this far out now, I would rather you be putting this together into plans that you can explain to somebody. Because I still feel like a lot of people have comments that seem like hopeful. They're hopeful, or they're guessing, or they're betting, or they're thinking, I think this will go up. Why? Oh, I can't explain it. Well, that's not tradable. Okay? So I'm challenging you to think about it. And how would you plan this using technical analysis? So you can have your fundamental bias. Fundamentally, I believe this will go up. Cool, right on. But seasonality and the potential for rollover this time of year scares me. What does scare mean? I see the probability of an increase of risk. So you start out as a trader first. Trading's easy. The difficult part of what we do is risk management. So now I'm in risk manager mode. Do I only take 500 pips on this? Or do I try to rally this up for 900 pips? Well, there are many different ways to handle that situation. I could sit here and do nothing. Which is fine because I'm already long. Okay, so I'm down here again if you don't see it. Okay, this is where I'm long. Okay, so great. And we're at 122 with a target of 124. So, right, so the best I could do is 700 pips per trade instead of 500 pips per trade. Now, if it's going to go up, there's that sort of logical fashion. There would be the stimulus process would look more like this, I think. And then there's the slow rollover, old man easing into a hot bath scenario, where it does more like this. Okay? So, I gave you three. Okay? A, B, and C. Which one do you think is going to happen? A, it's going to trade like absolutely normal. B, there's going to be a stimulus rally. Or C, it's going to roll over like an old man easing into a hot bath. A, B, or C. Please place your vote. Well, A and C, I will reject A and C, Jim, because A creates a counter trend. So it would just not, it wouldn't be an old man rolling over. It would be a counter trend. Okay. So it's just slightly different. It's a difference in velocity. So an old man easing into a hot bath has very low velocity, right? It's very slow. Where the velocity of B creating a counter trend in early January would have a much higher velocity, and I'd have to behave differently. That's all. So I might end up looking like the same pattern, but also a dramatic decline in January or February is not going to change my opinion fundamentally. You have to understand that as well, right? I know you do, Jim, but I'm talking to everybody. So a high velocity decline in January is going to have me buy, probably the third week of January, and then I'll try again in early March. Okay, I will buy those drops because they're value propositions for me, because I understand the heavy weight above us of all this profit and taxation and everything that happens in early January. It'll create this giant drop. And the same way, like a proper value investor tries to find good companies that are mispriced low. Okay? Usually it's a systemic situation. So if you remember back in March, I'm like, now is the day you should invest into 3 companies that you've always wanted to buy, but you couldn't afford. You guys remember that? That's a value proposition. What I said was COVID is a systemic situation that has hit everybody and has lowered prices across the board for everybody. So what you got to do is buy all your market leaders cheap. Do you guys remember that? Market leaders, not low price. But if you can buy, let's say Apple or Google or whatever you want to buy, but you can buy it for 20 or 30% cheaper than normal, right? We had a whole discussion. Now, we might have done that either on Off the Charts with Wayne McDonald or maybe in the live group, but we had this whole conversation about the difference between value and cheap. I would never want to own anything cheap, to be honest with you. Okay? But I constantly look for value. So in this situation, let's say we have B. B, we get this stimulus rally. This thing heads up. We hit our January targets in the first week. I'm going to look for a counter trend. I would expect a big drop. Let's say whatever percentage, doesn't matter. Big drop in euro dollar, and I'm going to buy it. Why? Because it doesn't change anything fundamentally. All it is a decline in price across the board based on human behavior, not central banking policy. And to me, that's a value opportunity because I already have a plan. See, like I can talk very specifically and intellectually about certain circumstances that are probably going to happen. One of those things are probably going to happen in January. I already know what I'm going to do. I just don't know the exact day or even the exact minute. I don't know. And I don't know the exact price. I don't know. But I'm ready, willing, and able to do it, which gives me a distinct advantage. Okay? Because now I'm the one setting up the ambush, and I'm like, all right, come on, guys. But be cautious, because I'm going to crush you. You be cautious, I'll be ready. There's a difference. Okay? Question here. So you believe it could reach 119 as forecasting expectation? I don't know what you mean there, Theta. I haven't forecasted 19. But if you, 19 I can see is an important number. I wouldn't forecast it though. But all right, so what situation would I buy it at 19? First of all, that doesn't make sense fundamentally, and that would be a ginormous disappointment for the market to have that kind of reaction. But would I buy it at 1916? Yeah, I would buy it there. But now you have to construct what scenario would create that. Well, Ali makes a good point. It is seasonality play, not macro, but not entirely. Like, don't think of it that way, because you might find 50% of the time there's an issue where this market drops because of seasonality, but then the other 50% of the time it doesn't, because there's different fundamental plays in each period. Like, do you think it matters? Like, let's do this. Let's talk about this. Do you think it matters if traders are profitable this year or not? Okay, because if you go back in time, there are times when there are lots of traders that are not profitable. They've had bad years because bad things happened. What if they're moderately profitable? Moderately profitable. Do you think this influences their decision of whether to profit to get out of the market at the end of the year, or not? What if they're hugely profitable? Huge. Okay? Their fund is up 62% for the year. Are they going to get out? Okay? So I don't want you to ever say things like, I'm dumping this because Wayne told me it's going to fall. Or I'm buying up all the yen pairs in the third week of August because Wayne told me there's going to be a rally. I want you to think. I want you to understand. I want you to know before it happens because you've done the research. I want you to think and understand. Never try to repeat me. There's already a me. The world doesn't need another me. They need you to make big decisions. They need you as the leader. Okay? So I want you to think like, what's going to happen at the end of the year and why? What's your thesis? Well, Wayne told me it was going to fall because of seasonality. Well, dude, that's an extreme oversimplification. And that's not going to get you to trading $1 billion a month, right? Okay? So obviously this influences the way that people behave. Okay? What is your value? The value is you thought about this and you're making decisions. Okay? So like in the live trading group last Thursday, I asked somebody, I said, well, did you go through the last, several decades of similar setups, whatever the topic we were talking about? And he's like, yeah, I did all of that. Went back a couple of decades. I'm like, cool, good. Now we have the basis of a discussion. Okay? And that's the Socratic method of dialogue where I think most people will actually learn. Okay, you did some research and you found some facts and from this you're trying to make conclusions. Let's talk about it. First of all, what did you find? See, we can have an intellectual conversation now from which you can learn how to make decisions. That's called intellectualism. Okay? Okay? There's a difference between reading a lot of books and then understanding. Right? That's why the book club's got to be so different. Okay? There has to be a dialogue of conversation so that you can then make good decisions. Okay? Because it won't last very long. So, for example, let's say you get a Harvard education, but all you did was read the books and pass the classes. Great. There are plenty of people that just do that. Great. So you get a job because you have a Harvard degree. Great. And then you start doing your job and you're making decisions and people are like, well, how'd you come to this conclusion? And you're like, well, it's in my textbook. What? Yeah, that's what it says in my textbook. Right? You're like, what? Yeah, the author of this textbook told me that this is like, dude, you have no value anymore because now they should just hire the author of the textbook. So, right, you have to have like this level of understanding that you can talk out a decision-making process. Intellectual definition. Let's try to find this. Let's see what this is. It's probably not a good... There we go. Here we go. An intellectual is a person who engages, okay, in critical thinking, research, and reflection. This is what the book club is going to be. And this is why I hate calling it a book club, because a book club is about people getting together. Half of them don't even read the book. And then you end up just talking about your kids and sports or something. Okay. The goal is not reading books. Okay. The goal isn't drinking $12 Chardonnay and talking with your girlfriends. That's what bachelorette's for. Okay? An intellectual is a person who engages in critical thinking. This is huge. Critical thinking, research, not opinion, and reflection. The meditation and the forethought that goes into knowledge. Okay? About the reality of society and right? Solutions, normative problems, and gains of the authority and public and whatever. Okay, you need to learn how to predict the future. It's not in a textbook. Do you see like how much potential we have here? We're not just going to read the top 100 investing books of all time, but we're going to critically think about it, understand their research, and then reflect as a community and as a group in real time live about what it is that they just proposed to us. What does it mean? How did they get to these conclusions? And how do we think and feel about it? And imagine it was the 73rd book that you've read, and how much more you can think critically about what this author is saying compared to the other 72 authors. What are similar? What is different? What does it mean? Is it still relevant if it's an old book? Have things changed? Can you still invest into stocks and companies like Warren Buffett, or is it too late? Okay? So anyways, I try to always challenge you and engage you in critical thinking, and I hope you appreciate that. And I constantly focus you on getting the research. Do the research, and I constantly ask you to reflect. If this is going to go higher, why do you think so? Write it down. And if it hits this target, what will you do? Write that down now. That's the proposal of solution. See, that's your value creation. This is your career. Getting rich quick trading Forex is dumb. You want to get rich quick, rob a bank, sell drugs? You'll do fine. There's some downsides to it. But what the heck do you mean get rich quick? Why is that even attractive? I don't understand. It's a dream of fallacies. It's a dream, it's a false idol. And it deprives you of your destiny. Why will you make a lot of money trading Forex? Because you engage in critical thinking, research, right? And meditation or, thoughtfulness that produces a solution. Let me know if that's the type of trader you want to be. Someone who engages in critical thinking, research, and deep thought that produces a solution. Who wants to be that trader? Let me see. Dan, Diago, Jimmy. Anybody else? Jean-Guy, Eddie, Libor. You guys are on that path, right? Okay. Ben put $100 into MetaTrader 4. Okay. I think you should put it into education before you do anything. Marvelous Marvin is already that trader. That's cool. That's what makes you marvelous. Yeah. Do you realize if we get together as a serious community in this, right, in this intellectual investor endeavor, do you understand that we could easily read 2 books a week and crank out the top 100 books in 2021? Do you understand that we could easily do that? Well, not easily, but we could do it. If we had 25 people, let's say the average book is 25 chapters, and we read each book as a team, we could meet on Mondays and Fridays or something and read 2 books a week. Not just read, but discuss intellectually, engage in critical thinking. And at the end of 1 year, you will be the most knowledgeable investor probably on the planet. About real estate, about cryptocurrency, about investing in stocks, about starting hedge funds, about trader psychology, about foreign exchange, about macroeconomics, finance. I mean, just you will have, a master's degree in finance and economics and investing in less than a year. And for less than $500. Well, you have to buy a lot of books though. Are you prepared to buy 100 books? Right then and there, a lot of people are going to drop out. Yeah. Yeah, you're going to have to buy 100 books. And you're going to have to read at least 1 chapter of 100 books, but then discuss all the chapters and all the books with the group, with the team. But you guys, we can do whatever we want. But I'll tell you what, right? I'll tell you what, it's cheaper than taking 1 class at Harvard. Okay? Buying 100 investing books from Amazon.com and whatever fee I charge to be on, that's less than 1 class at Harvard. And yet most people won't do that. So I'm not sure. I hope we could have 25, 30 people, I think is all we need. And we can read 100 books in 1 year. So I don't know if you want to have that in your goal for 2021. How many people are seriously interested in that? Because 100 books at what, $25 each? That's $2,500 in books, dude. You're going to have to spend thousands of dollars in books. I'll probably charge a few hundred. So you're going to have, I would say you would need to budget $3,000. Yeah, Mahai doesn't, I mean, it's a serious thing, right? But that's less than one class at Harvard, for sure, for sure. What was that perennial? You guys read books together? I wasn't aware of that. Well, I can't give you the books for free. Oh, yeah. Really? I wasn't aware of that. That's interesting. That's a good place to start, right? Cool. All right. Well, I didn't see 30 people, so I mean, right? The more we have, the less work it is for everyone. The more people we have, the easier it is for everybody. But yes, you have to be able to afford to buy the book. For sure. Okay? But the cool thing is you're not going to have to buy all the books up once. So I'll pick like 5 books. You buy the 5 books. Meanwhile, we're already reading 5 books. So think of it as, but we want to do more than 5 books a month if we can. Well, they're not textbooks, right? They're books. So I don't know. And you can buy a used book on Amazon. Like, I don't think it matters. Some of the books are going to be $12 and other books might be, like my book is $65 or something crazy, right? I don't dictate that. That's Wiley's book. I sold my book to Wiley before it was even published. Okay. No. But here's the list. The top 100 investing books of all time. There's the list. Now, I'm sure there's a lot of lists, so I will make the group decision, but I want to cover everything. Right? Real estate financing and investing, Bitcoin and cryptocurrency, like we should know everything about that, right? Right? We're going to want to know macroeconomics for sure. We want to cover trader psychology, stocks and bonds and yields, right? Like if you should be able to go through and talk intelligently about the yield curve. Stuff like that. Yeah, the problem with the Adam Smith Wealth of Nations stuff. So I pitched that to the group 6 months ago. Nobody was interested. So I would go all the way back, like John Locke, for example, Adam Smith, Ricardo and Rents. We would read Karl Marx, right? All that kind of stuff. But, right, and I would do a history of finance and of economics, because economics leading to finance, right? Because finance is the study of cash flows. Economics would be business activity and transactions and things like trade. So if we're going to talk about trade and trade wars and open economies versus closed economies, you have to do Machiavelli. You understand that? Like, you have to know that. And you're like, what? You're like, yeah, well, you have to study what happened with the Venetians and the Genoese. And down Machiavelli was farther south, but like what was happening in the Italian peninsula and the the conflict and the resolution to economic challenges that occurred between their kingdoms, and things like the Medici. So how did the Medici handle, right, their economic challenges, and how did you expand your economy and the choices that went into that? I would want to go all the way back to the Black Plague, right, and discuss how that created entrepreneurialism in Europe, because it impacted how or why Italy, in particular Northern Italy, became so successful at things like creating insurance. Why did they need insurance? Well, because they were expanding global trade, trading farther and farther than ever before, right? And so they went on farther journeys with boats and ships full of very expensive goods for trade. What happens if the ship doesn't come back? The investors lose their money, so they create insurance, right? So how do we get to that point how do you get from, why was France still run by a king and a pope? Because there was two popes for a while, remember that? And why was then Northern Italy run by business people? They created city councils. They created governments, not people mandated by God, but rich people, like merchants, right? The merchant of Venice sat on the city council, not the king ordained by God. So how did we get there? You could really go back in time. It's very, very interesting, right? Because that was another form of democracy now. Okay? And there wasn't a lot of reason to get rich before that, because the king would take it all. Especially if you were a serf. And you're like, well, I'm a farmer and I serve the serf, right? The serf serves the landlord. So why would you care about productivity, right? Yield per acre of the food you grow. Why would you care about yield, like return on investment, if the king's just going to take most of it anyways? So you're like, well, screw that. I can work hard, or I could be lazy. I could try to rotate these fields so I can get higher productivity, but who cares? The king's going to take it all anyways. I'm still going to be a miserable farmer. Okay? You see that? But nobody responded well to that, so that's not what we're going to do in this group. But maybe we can do that down the road, if maybe in 2022, after we knock out the top 100 investing books of all time, maybe I'll start another club, and I'll go through the entire history of money. Okay? And money would be defined by, I would go back to time of Southern Iraq. I would go back to, money is not cash. No. And that's the issue. But where did cash come from? There was a time when there was not cash. We traded stones and gems, and then later on gold. But that wasn't cash. That was a precious metal. I'm thinking Southern Iraq, thousands of years ago. What was the group that lived in Southern Iraq thousands of years ago? I have Assyrians in my mind, but it's not Assyrians. Who was it? It's just slipping my mind. They were the ones that first created banks. And to me, the creation of fractional reserve banking is the beginning of money creating value versus simply being a store of value, medium, and exchange. Older than the Persians and much more specific. Babylonians, that's not southern Iraq. Why do I have Assyrian stuck in my brain? Maybe it is Assyrians. No, but it's Chaldeans, no. Mesopotamian, no. Nebuchadnezzar. You guys are just throwing out names now. Oh, I am from. All right, okay, so So I think it's Basra. What was Basra? That's southern Iraq, right? Towards the port cities. What was their kingdom called? No, you can't say Persian. That's Iran. It's not even close. Now, you might have been under the influence of Persian at that time, but it'd be very distinct. Why can't I think of it? Anyways, Sumerians. There you go. Sumerians. Sumar. Thank you. Thank you, guys. Sumerians. Okay, Sumar was the original name of Basra, I think. And if you're from Iraq and I'm butchering this, then I apologize. But I'm trying to throw an idea out there, okay? But it'd be cool if you can confirm or deny it, though, Sinan. So, the Sumerians, okay? Sumar. So the Sumerians had this great idea. Carrying around gold was very dangerous. Okay? So one of the services provided was to provide safe storage of your gold. Okay? And you would deposit your gold and they'd give you a piece of paper that showed that you owned the gold. You had a certain amount of gold in the vault, probably in a particular spot in the vault. And it's your name, and it's the quantity of gold that they're holding for you. Okay, great. But what ended up happening is instead of, let's say you want to spend your gold, you want to buy a trinket, okay, a souvenir. You're like, I'm in Subar, my wife and kids are going to love it. So you go to buy something, right? And they're like, well, if you come with me, I can go to the vault and I can get the gold, and then then I'll pay you the gold, and then you can give me the thing. After a while, what happened was, I'll just give you a piece of paper that says, no, you have the gold. And this was particularly good because what if you wanted to buy a trinket, right, that costs, let's say in our time, $50, but you have $7,000 in gold. It's just gold and coins, and it's not perfectly easily divisible. But on paper it is, so now you can say, well, I'll give you, of one coin, I'll give you a certain value of that one coin. You can have 1/18 of a coin or something, right? And so the bankers provided that kind of service where they could say, okay, so you'd share the paper, and then someone else would come in to the bank, and it's now their gold. Part of it is their gold, so they can move a little bit from the first person's stack to the merchant's stack, and that gets, right, and they update the piece of paper. And pretty soon all you were doing is trading the paper, right, paper trading. And people would come into the bank with the papers and things were accounted for. Then the next step happened. The smart bankers said, oh, wait, we're just moving gold around. Nobody actually knows how much gold there is. We can lend some of this gold out. So people would come over and borrow gold for with the promise of providing a future cash flow. So now we go from banking and accounting to actually then finance. Okay? Yes, it was a long time ago, right? How long? I don't know. There's a thing called Google, right? Google it. So now the bankers are not just providing safe storage, right? Then they added accounting to it. And then not just accounting, but then finance, so that they can take a fraction of the gold, lend that out, because they know most of the time, most people don't actually ask for their gold. They're just trading the paper. So then they can loan out the physical gold in exchange, right, for an interest rate, or usury would have been the word at the time. And so now they were lending gold. So now they're providing finance, accounting, and safety, right? And this was important because the difference between carrying gold around in your pocket and what I'm talking about is the beginning of money, because money is a medium of exchange, a unit of account, and a store of value. Okay? And at this point in history, it became supremely important for all three of those things. Okay? A medium of exchange. So now you don't get into this problem of like, I'd like to buy a spoon, but I have $1,000 gold coin. And the guy's like, dude, the spoon's like less than $1. What am I going to do? Give you $999? Like, I don't have this. And well, we could scrape a little edge off. Like, you just couldn't do it. It was very difficult. Okay? You see what I mean? So now, for that to do it, you have a store of value, but it wasn't a good medium of exchange. Sort of like Bitcoin. Like, you can buy a pizza. I've never bought a pizza with a Bitcoin. Okay? I do about $150,000 a year in Bitcoin, right? So I could, but I've never done it. So it's not quite yet a medium of exchange. It can be. And Bitcoin people get all pissed off when I say these things, but I'm like, generally, it's not generally accepted there. I can't go buy diapers and a bottle of whiskey, right? With Bitcoin quite yet. I know you can, but not everybody. When my grandma buys, a bottle of whiskey with a Bitcoin, then it's a medium of exchange, right? So you had the store of value, but it wasn't a very good medium of exchange. And it was barely a unit of account because people didn't do accounting. You didn't have life savings. You just had the amount of money in your pocket, right? And then you had your goods. The stuff you owned was your life savings. So this is why, Europeans, for example, had like silver candlesticks. Well, whenever you needed to buy something and you were short on cash, you just take your candlestick, melt it down into a bar of silver, and now you got money, right? So anyway, so in Sumer, the Sumerians were smart because they created banking, first of all, as a place to store value. Then they created a unit of account, and then they created like the paper trading part of that. So again, that's the medium of exchange idea. And then the fractional reserve banking idea of just turning a deposit from a store of value into a cash flow, into financing. So financing, banking, accounting, all of that kind of started in that period. And so I think that's where I would start. I would start in southern Iraq in Sumer. And then we can go through the entire history of money. Because before then, it was just like, I have a bead, trade, give me some tobacco, I'll give you a bead, right? It became much more sophisticated over time. Yeah, it is crazy, in fact, isn't it? Yeah. It is crazy. You're right, Sinan. Okay. So, maybe we do that in 2 years. Is anybody here interested in that kind of education? Well, that's what the interest rate theta would be. Country risk. So you can invest into South Africa, for example, or you can invest in the United States. How do we know which one's riskier? Well, you can invest in the United States and they'll pay you 0.25. Or you can, right? Or you can invest into South Africa for 6.25. Why does South Africa have to pay more money to borrow? Why do they have to pay more to borrow money from you? Country risk. See, so this is where we get. So I get very excited in the history stuff. I've studied most of it, as you can tell. But this idea, like the entire history of money over the course of 30, 40, 50, 60, 70 books. One person says, very much so. The other person, like, I think so. Okay. LIBOR says they may default. No, I don't think that. Otherwise, it would be 16.25. It's just more complicated of a place to do business, and they have to attract you. South Africa has to say, all right, you need to make a choice, investor. You can invest in the United States or you can invest with us. So think of it as an auction. The more uncertainty related to what you're buying, the less you're willing to pay. Or, in the case of a cash flow, the more they're going to have to pay you for that risk. Jim's got to get through the first one. But it might be interesting, right, Jim, where if we lead the group through year one and we all read the 100 best investing books of all time, people might be better apt to understand the second one, which is the entire history of money. But I think it would be interesting if I just hired a camera crew and I go out and create a Netflix documentary on the history of money. And like, scene 1, episode 1. I'm in Sumar, baby! Cut to B-roll. Right? Yeah, let's party in Basra! Boom! Let's go! Right? Cool. Party like it's 1999 BC. Bum, 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 bum. Ooh. Right? Wouldn't that be great? Party like it's 1999 BC. Yeah. All right. So let's dive into here and then let's go into the other stuff. Okay? So hopefully you've made all your decisions. Hopefully you've moved all your lines in the sand. Okay? Oh, I imagine. Sinan, do you happen to be in Basra? Or are you just saying as an Iraqi, you know this to be true? Or like, do you have friends and family? Are you from there? Like, that'd be an amazing coincidence. I'd have to look up the spices. You're from there? That's crazy. Yeah. What's the most expensive hotel in town? Well, I got to be careful because Kuwaitis probably come over. I want to stay in a nice hotel and party in Basra. That sounds cool. It can't because of COVID though. Yeah, okay. Your entry seem on point. Well, the most important thing is you trade at the right time. Yeah. All right, so here we are, and then let's split this out because these yens are strong. I don't even know if I'm still in my trade or not. My last yen trade might be dead. And Aussie, Aussie, Kiwi. Let's see. Yeah, I'm out, huh? I'm out? No, there I am. Okay, there's my stop loss, 333 pips, still floating. Okay, technically here, you see, it's been a problem ever since. Can't get through the 74. Okay. And the entry, I got to go way out here. Here's the entry. Okay. Cool, right? So the question is, can we survive? And I think the only thing that can do this would be a stimulus. Oh, absolutely, Forex. You have to. So the challenge I gave people earlier in the year is to have 30 to 50 trades open at the end of the year. I simply, as examples of how and when to trade, put on 6 trades. But, dude, you're a professional. Like, you could have 6 trades a day pretty easily. So, right? So, yeah, to only be on, like, right? Like, if you, so these 6 trades have produced approximately 2,500 pips. Okay? Okay? So you should have 30 with an average of 400 each. And this is why we're having these conversations of like, are you getting out? Remember, this is a time-based. We talked about it here. This is a time-based exit. How do you think it's going to go higher? When are you getting out? Why do you think it's going to go higher? Why do you think it's not going to go higher? But like, when are you going to get out? When are you going to get out? Okay. But Guala, you can do anything you want, but like this is what you're supposed to be doing. Okay. Wow, Basra's crying. Basra's singing to me like a siren. That sounds cool. Do they like Canadians and Australians? Am I going to be safe? So anyways, we're right on the precipice, as I said earlier. So here's what I think is going to happen, right? We get a Fed meeting and it goes, And the best thing about it is if the Fed meeting is disappointing, not because of policy, but procedure, we're going to be down here and I'll say I did the right thing. Okay. So that's that. Okay. Ben says, is it going to downtrend now? You should be able to tell me why. Okay. This would be risk off. If this hits down, it would be risk off. Okay. This could come from, let's say, GDP. Let's do it in black so it's easy to say. So Kiwi GDP is equal to, can you guys do it? C plus I plus G plus X minus M. So you could have a risk-off scenario because New Zealand exports are down. Okay, why are they exporting less? Is it their economy or is it the global economy? So the next thing would be like, so there's trade localized. So from a macro view, only talking about New Zealand would be a micro issue. It's not necessarily microeconomics, but it's for a macro guy, it's micro. So there's trade, but then there's global macro. So I'll just say macro. Everything's coming down because the global economy is shrinking, and that's why there's less trade. And then the next one would be profit taking, which I think is what's going on here, right? And then there's just counter trend, which means we're short for the month but long for the year. So there's a lot going on here that could create this. So you have to have made this decision ahead of time. So this is a pretty obvious top, okay? And we talked about it. I was super ridiculously clear about it. We planned all year to get out this week. You understand that? This whole period is an out. So that's why I'm like, you're still hoping for more on euro dollar. Okay, I got it, but you have to understand you are choosing, you are deciding, you're thinking critically, and you're deciding to overshoot, which may not be wrong, but you have to know that that's what the decision you're making is, and you should probably have a pretty good reason why you've made that critical decision. Okay? So on euro dollar, we're smacking the target, running right into central bank meetings, and you're like, yeah, I want more. Why? Oh, I think a stimulus package is going to be announced. When? Oh, well, I thought about that. So they're going to have to come to a conclusion today, write it up tomorrow. There's going to be some back and forth tomorrow right before they put any ink to this, and then they got to pass it Friday, send it to the president to sign. So it's got to pass the House, pass the Senate. Senate has to kick it back. Otherwise, they don't look like they're doing their job. So there have to be a little bit of back and forth on Friday, and probably midnight on Friday, the President of the United States is going to sign it, turn it into a law, and this rallies. Now, how can I know any of that? Well, I don't know any of that. That's what my critical thinking tells me. Okay, cool. What does your critical thinking tell you? If you think we're going to overshoot the month because of a stimulus, well, how'd you get to that conclusion? That's all that matters. Right or wrong, there is no such thing. Tell me why you think so. That is the intellectual part, right? Now, to talk about it weeks in advance to say, this is the last day of the normal trading year, and this is the beginning of the profit taking. Okay, I gave you 4 reasons why this would get strong. Okay, 50 weeks ago, we knew that this would be the week of profit taking between now and the end of the month. I said sometimes it's the 19th and sometimes you don't know, but it's the week of the Fed meeting. This is the week of the Fed meeting. And the day before that, we double topped. Okay? So do you think this is going to make a higher high? And if so, why or why not? You see? Okay? It's cool, right? That's what I'm trying to get you to do, guys. Think about it. I want you to think and understand. Okay? I want you to know things. And I want you to, your value creation is from your ability to critically think and create solutions, which means you have to make a decision. That's what that is. So I hope you enjoy your time with me every day. I appreciate your time. I try to give you as much as I can every day. I hope it's worth your time. Please click like. Please subscribe. and please leave a comment on the recording, okay, on the recorded video. Document something that you learned today. We talked a lot. And hopefully there was a takeaway that you had. I'd like to think that there was a purpose to all of this. But thank you for being on my team. Thank you for being part of Trader's Way. Thank you for being part of FX Boot Camp. Thank you for all your hard work and the loyalty that you show me and the respect you show me every day. I really do appreciate it. You're good people. Thank you for being in my life. And I will see you